This is an Uncovered Japan company research report on Startz Publishing, ticker 7849. Startz is a small Japanese publisher that finds romance and fantasy stories on its own web novel platforms, then turns the winners into books, manga, films, and anime. The investment question is whether that unusual IP engine deserves more than a low single-digit earnings multiple. At the report's June 2026 reference point, Startz traded on 8.5 times forward earnings, with a 3.88% dividend yield. It also reported a 13.4% return on equity and an 83.5% equity ratio. Those figures describe a profitable, debt-free business, but they do not remove the risks around hit-driven earnings, a thin free float, and a shrinking print market. The product is intellectual property, but the customer journey is tangible. Aspiring authors post stories on Startz's own submission platforms. Readers supply early engagement signals. Startz selects the most promising works, edits and publishes them, and can later expand the same story into manga, film, or anime. That media mix escalator lets one successful title create several revenue streams without starting from zero each time. The company has two segments. Book content accounted for 59% of fiscal 2025 sales and generated a 34.3% operating margin, making it the high-margin but hit-sensitive engine. Media Solutions, built around Osmall and related lifestyle media and reservations, contributed the other 41% at a lower margin. It is less glamorous, but its steadier profile helps diversify the publishing cycle. Startz's core advantage is not simply publishing a popular genre. It owns 3 novel submission sites: Noichigo, Barry's Cafe, and Novema. Together they hold more than 300,000 submitted works. Because readers can browse, comment, and rank stories before a print commitment, Startz gets an early demand signal. That makes discovery more data-informed and less dependent on the traditional publisher's editorial intuition alone. The profit and loss history shows the central trade-off. Startz has achieved unusually high profitability for a publisher, but results move with the timing of hit titles and adaptations. Fiscal 2025 revenue was 8.14 billion yen, and operating profit was 1.76 billion yen, after a weaker year for book content. The report also notes that editorial staffing constrained title output, making operating leverage both an opportunity and a risk. Over 5 years, Startz grew revenue at roughly a 12.9% compound annual rate and lifted operating profit dramatically, even as Japan's overall publishing market declined. That contrast is important. The company has benefited from digital comics, a focused female readership, and IP monetization. Yet the wider industry still faces print contraction, paper and logistics inflation, and a more competitive digital ecosystem. Management's path forward combines several levers. The company wants to extend more titles into manga, film, and anime, widen its catalog through new imprints, improve editorial productivity with AI, and add adjacent growth through the Rely-on Trip Tourism DX acquisition. The report treats AI honestly as two-sided. It could ease a staffing bottleneck, but it could also fragment attention and lower barriers to content creation. Start's medium-term plan targets 10 billion yen of revenue and 2.5 billion yen of operating profit by fiscal 2028. From the fiscal 2025 base, that implies about 7% revenue growth and 12% operating profit growth per year. The company has shifted to a rolling 3-year planning method, which is sensible for a hit-driven publisher. Investors should treat the figures as a direction of travel, rather than a fixed promise. The valuation chart puts today's discount in context. The report places the June 2026 trailing PE near 9.3 times versus a 5-year average of 11.1 times. The gap is understandable. Startz is a small-cap company, roughly 70% controlled by the Startz Group, and it is coming off a weaker earnings year. The key question is whether those are permanent limits or risks that can be worked through. The report's 3-year scenarios are the author's assumptions, not price targets. For fiscal 2028, the bear case is 2,600 yen, the base case 4,250 yen, and the bull case 6,200 yen. The range reflects different assumptions on revenue, margins, and valuation. The upside case needs recurring hit execution and some re-rating. The downside case reflects the possibility that the recovery and strategic levers do not materialize as hoped. Startz Publishing combines a difficult-to-copy discovery model, high margins, a debt-free balance sheet, and a modest valuation. Its weak points are just as clear: hit reproducibility, cost pressure, editorial capacity, and the liquidity discount from the parent subsidiary structure. This is research, not investment advice. The useful next step is to follow the concrete milestones: earnings, IP adaptations, productivity gains, and any change in capital return policy. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.